Hi, everyone. Walter Krajewski here with Regions Mortgage and uh, doing this live cast with Kelly Stone from Rising Point Solutions. How are you today, Kelly?
I'm wonderful. Wally, how are you?
I'm doing great, thanks.
Good.
So we wanted to talk a little bit about credit in this environment, and I would going to talk a little bit about mortgages and some of the announcements that have been made by the federal government. And Kelly, you want to say a few words?
Yeah, I'm trying to keep up on all the changes as well as everybody else. But Wally, I think that because you're in that industry, you're going to hear these changes before I do. So I am very curious about what you heard the announcements. So tell me a little bit about what's going on. What is the mortgage industry planning on doing for all these people that are out of work?
Yeah, so what the Fed has done is they've asked the servicers, that is who you're making your mortgage payment to. So a couple things to note here. If you started with a mortgage loan officer to get your house, and then you closed with one bank, and then they sold you to another bank and another bank, whoever you're making your payments to now, that's who you have to call.
So that's
Uh,
the servicer.
that's the servicer.
That's who you pay.
And I want to make this very clear. The Fed has not said, nobody has said, you don't have to make your mortgage payment. You have to make your mortgage payment unless you call your servicer and you work something out. Now, what the Fed has actually asked them to do is come up with some sort of solution, either it be a skipped payment or interest only, or spread the payment out over a number of months. Each servicer is going to have their own little solution, hopefully, to whatever's going on with your life. But each situation is going to be a little bit different. There's probably a form or forms that you're going to have to fill out. This is a government project, so there's going to be a lot of forms. And then you'll be able to figure out exactly what you can do. Now, the important thing here, or the interesting part, I should say, is that the government has also said, we also like you to not show these as late payments on your credit report, because one of the lessons we learned from 2008, 2010 was when the economy did start to go, so many people's credit was impacted by the events of that time.
Yep.
That it actually took the recovery longer to start going because people didn't have access to credit because their credit scores were hit and their credit was hit. So I did speak to someone already, a borrower who had called the servicer, and they said that they would show it as a skipped payment or that they just wouldn't report it for that month. So maybe you can talk to me about how that might affect your credit score if it just doesn't report for that month.
That's actually a great question. And that's something that I keep pointing out to people is whenever you do speak to your service provider, make sure that you are taking notes, number one. Find out who you're speaking to at that moment. Get an employee number if they have one. Write down the date, the time. You want to make sure you even write down the phone number of who you called so you can have everything documented. We like to preach that documentation beats confrontation, and you want to be proactive as opposed to reactive, because like Wally just said, in 2008, when people were going through this process and they were making late payments, even though the service provider told them to do so, that was something that was really taking people a long time to get back into a good standing again. And these are people that have had a long-standing history of positive payments that fell into hard times and had this as an issue, right? So now, coming to this point, knowing this, the goal is now to make sure that we are finding out, are they going to report you late? Because if you're doing a loan modification, typically they're going to report you late. Right, Wally?
Yes, typically,
So
yes. If you're skipping
forbearance.
payment, you're stopping payment.
Exactly. And so forbearance is going to be different, but again, you want to make sure that you know what's going on. Just like with student loans, when your account is in forbearance, that account is essentially on hold. So it doesn't affect you negatively. It also doesn't affect you positively. It's kind of like just on hold, right? And that's fine. That's so much better than having one late payment. We've seen one late payment drop the credit score up to 110 points. So that's really valuable information to know. You want to make sure that you find out, how is this going to report, right? If they're not going to report, great. If they're going to report that it was paid, fine. But if they're going to report a 30-day late payment, that's when you want to hit the brakes and find out what other options you have.
Absolutely. And that's really good advice. And yeah, we have seen credit reports credit scores drop 110 points or so, maybe not that drastically in some cases, but certainly it's going to have a big impact, especially on mortgage payment.
Absolutely. So, what else? What other news can we expect? And I had a question. Is there a deadline for this? So, let's say somebody's going along right now and they feel like, okay, maybe I can make my payments, but in the next month, all of a sudden they get laid off and now they're concerned. So, is there a deadline to getting this done? Is there any kind of word on that?
There's certain, I haven't heard of a deadline being talked about, but I do know that, probably for at least the next couple of months, this is going to be in effect. And, it's really going to depend on how, what kind of response we see with getting everyone back to work in the economy and that sort of thing. So it's very early in the stages of this. We know we're still getting a lot of cases every day jumping. Hopefully, with the quarantines of different states, we're going to see that number start to level off next week. Hopefully, go down after that. But still, that still doesn't mean that everything's back to normal. That means that okay, we're finally starting to see the beginning of the end. Hopefully. So I would imagine it's going to last at least 2 or 3 months, but that's really good advice as well. If you can make your mortgage payment this month, but maybe then next month you have trouble or you need to skip it or whatever's going on, that's a possibility as well. So I don't think the servicers are going to be too eager to just cut this off. It seems like, as a matter of fact, in the relief package, it seems like there is a lot of help for non-bank servicers. So keep in mind that when you're dealing with a bank, they have a lot of deposits, right? That people have their checking accounts and savings accounts and CDs and all kinds of other money. So the banks have that money available. So if somebody misses a mortgage payment, they just take it from one area, move it to the other. Okay, the bank is solvent. On non-bank servicers, though, that's not the case. You have basically companies that are using the money that they're getting in every month from those payments to send to the Fed to make the mortgage payment, make the bondholders happy. In this case, if vast number of people don't make those payments, they can't send that money to the Fed, so they're practically insolvent. Now, who knows what's going to happen here, but it appears that there's a lot of relief from the latest stimulus package for these non-servicers.
That's great news.
I mean, for the non-bank servicers. I'm sorry. Yeah.
Right.
Let me get that right.
And that is good because we know that would help the consumer as well. So
correct, because they would be more aggressive, let's say, in terms of in terms of helping people then.
Yeah, and more willing to help, right?
Exactly. And one other thing I want to bring up is that for people that do have their jobs, even if we're talking some of the unemployment numbers going up to 5, 6, 10%, I've heard actually some numbers over 10%, which would be absolutely horrific. That still means 80, 85, 90% of people are still working. And if you are working and you want to take advantage of the low interest rates, we have interest rates that basically a couple weeks ago were on par with the lowest ever that we've ever had. So it is a good time if you haven't looked at refinancing to take a look at that. I'd be happy to help you with that. But just to throw that out there, that with everything else going on, that might be the last thing on your minds. But
right.
I do want to throw that out there because it could help a lot of people with a lot of money over time.
That's true, because if you do have a higher interest rate, there's ways, especially if you still have an income, there's ways to save you money, because why pay more when you don't have to, right?
Absolutely.
And if your credit isn't where it needs to be, and you already know that, now really is actually a great time. I'm sorry?
I said you can actually refinance, lower your payment, and skip a payment. So you could have, not only skip a payment, but have a much lower payment, when you come out of the refinance as well. So, and then by then, hopefully the economy's, starting to get going again.
Yeah.
Let's hope so.
And like I was saying, if your credit isn't where it needs to be now, you can start working on it now. Excuse me. Now's the time to make sure that you are attacking it, because actually the bureaus are just like everybody else, where they're having a lot of people not in the office. And so when we do the research and we do the disputing, we're going to see better results because they're not going to take as much time. And we're going to get the information back from them to clean up the credit a lot easier when they are low on manpower, right? So this would be definitely a
So
time.
that brings up a good point. Let me ask you, how long does it typically take someone to, I don't want to say fix their credit because there's a lot that goes into that, but if they have an issue with a credit report, let's say the credit report is showing a late payment where it shouldn't, how long does a process like that usually take?
People typically start seeing updates in about 45 to 60 days. Technically, the bureaus have 30 days to do their own research and respond. So with mail time and research time, typically we let people know, plan on 45 to 60 days, because then they also have to update once they do finish their disputes, I should say their research of the disputes. So
Excellent.
I got some minions coming in, and I don't want to cut it
That
short.
sounds like a good place to end it, right? So
Yeah, I
thanks
think.
so much for your idea. Thanks so much for that, and hopefully everyone found this informative. And if you have any questions, please let us know.
Yeah, thank you so much for sharing the information. With everything changing on a daily basis, I love tapping into experts like you, Wally, who really understand the industry and can share so much valued information.
Well, thank you very
So
much.
thank you.
Pleasure always.
Well, I hope you have a great day. And guys, please like and share this video. We want to make sure that everyone is just as educated. And if you have any questions, please feel free to reach out. We'll put our contact information in this post. And I hope everyone has a great day.
And above all, please be safe and take your precautions like everyone's saying. But be safe.
Stay healthy. Thank you.
Yep.